Good weekend, all. Ira Epstein of Linn Associates on a weekend that's full of fall. It is cold out there. I woke up in the 40s in Chicago. I don't recall the last time that was it, living downtown. They'll say maybe we'll get up into the high 50s today. I love it. You know, nice, brisk weather. Just don't give me the snow. I can handle that. And it is Saturday, October 16th, 2021. So a big up day in some of the stocks. I said some. The Russell didn't participate in it. Gold got set back, and there's reasons for that. If you looked at the daily chart, you got up to those upper bands. I warned you, there and in silver, be careful. That's the first go at it. I think there's more building that has to go on, and I'll show you the reasons for that. But before we get too far in this, if you like these videos, please give me a thumbs up. Second thing, at the end of this, and I know so many of you see the end, you shut off. This enhanced Bollinger Band course that I had put out, you're going to see when we talk about this. If you don't understand Bollinger Bands and what magically supports and stops rallies, both things, it can support the break, you know, when it breaks down, it finds that support, the rally, learn this. This is like your master's degree in it. Now, if you don't understand Bollinger Bands to begin with, this isn't going to help you in any manner whatsoever. If you do and you think you got it, you don't have it. I'm going to kick you to that next level. And it's a big next level. It's not just a little bit. So at the end of this, you might want to give it your 20 seconds. All right. As you can see, we're still up sharply in all the energies. Be careful. You're now reaching that point of Bollinger Band tops. I'd be a bit cautious. Bonds and notes finally getting back on track, gaining back some yield. I say finally because I do think that what we've done is we've got a floor there. I think that's pretty much a given that the Fed's now going to begin the tapering process. The question is the speed of it. That's going to be a big question as we get there. In the grains, we had a heck of a bounce, and the beans bounced just enough to lose a bearish embedded reading. Now, if they don't get it back immediately come Sunday night and Monday morning, game over. Then I think that there's more short covering to be had from there. The dollar giving back a little bit, but not enough to say that it's broken apart. So let's go to the charts. We'll start off with one monthly chart, and that's going to be the area chart of closes for the S&P. And as you can see, we're up 3.8% for the month so far. We're halfway through the month. The last monthly high we had was 45.20. We're 60 points away from it, so it's always good to know on the highest month what was the target. We then go to the weekly charts. Now here too, it's nice to know these charts. So let's come right in through here. I should have actually just put this as a high. The high close was 45.34.50. Got it? That's the important thing. This is where you're at right now. You held again, like you did back here, your first challenge of the 18-week moving average of closes. Once you back in this time frame, this was in 2020, got over the market finally after a big break. That was the game. It never came back. You had one break similar to this. Okay. But you're still a long way off from that high. Just remember that. You see that very clearly on the bar chart. What is the bar chart action? Bearish. Bearish? With all this? Well, I think you have forgotten that the market just came down on weekly basis. This was your high, 45.49.50. 1 week down, 2 weeks down, 3 weeks down, 4 weeks down. Then you finally got a small respite right through here, and you got a little follow through. You had a full month of lower closes and break lows, and now you've gone sort of sideways. Can this turn bullish? No. Take a look, 44.72, but you got a lower and low. So on the weekly chart, you can negate the downtrend with lower highs, lower lows. You cannot start a new uptrend. And the resistance, well, you've been playing at it. The support, whatever you want to call it. It's the midpoint. That's what the market often fights at. So now, let's assume that I'm wrong. I often am. And the market gets through 44.72. Then as it stands, the Bollinger tops 45.67. That general area would be the target, and over that high, that'd be a new high. I prefer it to wait a little bit and give me the Santa Claus rally with a better chart picture to get involved off of. Excuse me. Momentum had been declining. I think you'd agree with that. What else? You had an embedded reading. You lose the reading. Get ready. Right here. You're back under 80, and all you need to do is what? You went to the 18-week average. You already hit your objective, and the market's been marking time. When we step a look at the NASDAQ, is it so different? No. When the market lost its embedded reading, here it's embedded, it loses it, goes right there. Lower highs, lower lows. Now that week was October 1st. If you take out the high of an outside week down, the target, the way that I teach charting, is the closest main moving average. They're all under the market, so it would be wherever that Bollinger Band is at that point in time. Market doesn't take it out there. That's last week and this week. Now, if it takes it out, that's not the target. It's within the 2 weeks. Got it? There's certain rules to that. How did I find them? By losing money. Don't laugh at that. By losing. Every time over the years you lose. If you're stupid, you just go, oh, the market's against me. Analyze the trade. Why did I lose? Then throw it away. I did everything that I should have done. It was when the plays just didn't work. Or is there something there that's a little weird? That's how you learn. Okay? And when you see that, go back and look at other chart patterns. Yes, it requires effort. But isn't this what this is all about? Trading is gaming. Gaming at its very finest. Investing is different than trading. So Warren Buffett's not a gamer. Sorry, Warren. But there are plenty of the gamers, the traders out there. And trading, there's many definitions. Traders can be 6-month durations, 1-year duration, 1-minute duration. It's a whole different world. But they're looking at patterns and indicators. Got that? Very important distinction. So as I'm looking at the chart, you're pretty neutral in a bearish trend. It's not telling me a lot. If the pros did go short at 1501, their stop's got to be one tick over this high at 15,399. That would be 50. And maybe you get to the upper band. I'm not excited. Why? Even if it does that, I'd have you, or the chart would have, is the right way to say it. I say I so often. I'd have the lower low, higher high. I can't deal with that because I'm thinking of it in my head. The Dow's different. The Dow pattern is one of higher lows, higher highs, out and out bullish. I think the pros will buy at 34,766. I think they'll risk to one tick under last week, not this past week's low, of 33,680. Let's call it that. And I think they're looking to see if they can get to 35,712, but I think they'll dump positions there. Until the market's ready to break out, you assume that the upper Bollinger Band and lower will hold. That's why I started this whole thing off and said, please take a look at that. Invest in yourself. Learn how to work with these. They're very important. In the Russell, similar to the Dow. Isn't this strange? It used to be the S&P and the Dow that we thought were bullish, and technically, at the end of this week on weekly charts, it's the Russell that is the more bullish with the other. It was the Dow and the NASDAQ. Now it's the chart before this, which was the Dow and the Russell are the best. Interesting. Higher lows, higher highs. All I'm looking for is the upper Bollinger Band for resistance. On the breaks, what did I tell you? Just look for that. Learn to work with these bands and learn what it means when you step out of them and what's the trigger, what the formation you look for to tell you, it is making that whole sideways area a base or a top. Very important. I teach that. 30-year bond. This is short covering area. That's all it is. You're down to the 200-day average, the lower Bollinger Band oversold. Short covering area. No, it is not a trend reversal area. Ideally, you get up a little bit and you can set up a pattern with lower highs, lower lows so that we get tradable downtrends. But right now, what you've done in very short order is you've gone from the upper band to the lower band, hit them a few times, hit this a few times. You've established overall a trading range with downside bias. The 10-year note's a little different. I went too fast on that. Lower highs, lower lows. Downtrend, downtrend. Oversold, area of short covering. That's all. That does not mean that the pros are buying. Short covering. You're not embedded. Embed, they'll lock in and they won't give up on shorts. In the dollar index, okay, you're overbought. Look at this resistance. When market was coming up, what were you and I talking about on the weekends? Here it is. It's got resistance. Upper Bollinger Band, 100-day average, 200. Did I say that 200-week average? 100-week. I'm so used to it. I'm sorry for that. But you know we're doing the weekly review. And that's all that's happened. It's run into a formidable foe up there of resistance points. Now, I'll watch to see if it can get through it. Does the market develop the embedded reading? It isn't. So, overbought in a resistance zone. To get through it and not break much, it has to embed. That's a 3-week process. In the eurocurrency, as you fell down, remember, 40% of the dollar index is made up of the euro. If you're going to break here, I'm looking at the 200-week average, the 100-week average, the lower Bollinger Band in a market that both numbers are not under 20. The market then drops down, puts both under 20. This is October 1st. Now you get to the week next week. Both numbers are under that. And look at this week. You're embedded. That changes this game. So you're getting a warning signal on the dollar. It doesn't have to break much unless you lose the embedded reading here. Again, 40% of the index made that way. So I am looking on rallies that as long as it stays embedded, the pros are going to hit this market again. I don't know how much lower than that it has to go, but I believe that getting bounces and down there is what the pros are going to start playing for. In the Canadian dollar, remember they held that snap election. It got Mr. Trudeau nowhere. Well, markets come back since all that. Okay. Do I think it'll go much over that Bollinger Band? No. Be quiet. No. Why? It's very formidable. And you're coming off a deep break in the market and you're already overbought. Japanese yen. This is called riding the Bollinger Band. Understand what it is. Understand the technique involved. You'll think, well, as you should at the beginning. You hit it the first time, it should bounce. When it doesn't bounce, you've got to think of the word gorilla glue. That's how you'll be able to understand it. Once you see the market keeps hitting the number and doesn't get away, it's changing the nature of it. It's getting more bearish, even with an oversold condition. It refuses to step away. Then I teach a technique that when you break down in the market, it depends where in the range you close under the Bollinger Band if you're getting a legit breakdown that is called a breakout and make this a top. Take my enhanced Bollinger Band course. Bitcoin, up and away. Why not? I put in my newsletter this week that the government is going to allow Bitcoin trading as early as this week. I expect it. Bitcoin ETFs. We know Bitcoin trading is allowed. So what is that going to do? Well, that's going to put a rush of buying into Bitcoin. Please listen to this. How many of you really have a wallet? And I'm talking a crypto wallet. No, you don't want to bother. You hear these stories, how they break in and they hack these coin exchanges and so on. Well, now you're getting the legit way to approach this. Everything that a ETF does, if they can only be based on futures, means they have to buy futures contracts. They will buy the mixture of the big ones and the little ones to balance themselves out in the market. It'll bring the little guy into the marketplace in a massive way. The guy that's been sitting there going, I don't want to deal with. I'm not going to name the different crypto exchanges. It wouldn't be fair. You know, I couldn't name them all, and there's plenty of good ones out there. But this is a whole different way now. So what's going to happen is you'll be able to buy an ETF. You don't have to roll it all the time. Excuse me. It'll be based on the futures contract, and away you go. And if you think that's not going to cause this market to go higher, terrific. I do. Brent versus WTI. Okay, you've lost $1.50 in value. You're back to that 18-week average. This should be an area where the market holds. I'm jumping up and down in the energies because this week my paid subscribers have had a heck of a week in heating oil and the Brent. We lost on other trades during the week, but this much and made that much if they're in those trades. I have no way to know. I manage no one's money. I have enough trouble with my own. Higher lows, higher highs, running at the upper Bollinger Band, you're over it. So just because you're bullish, do you forget the fact that you're over the upper Bollinger Band? You're not yet embedded? No, this is the area pros are taking money off. You'll think they're buying because every day the market's running. I think they're taking money off the table. Are they bearish? No. But the odds of staying over this band, 5% of the time. What else? I realize it's the Gorilla Glue trade. You've got 2 weeks in a row over the band now. I count each week as taking away one of the 5 percentage points that the market can stay over a band on the algorithm. So 2 from 5 gives 3% chance this week that the market will stay over the band and a 97% chance it'll be under it. That's how I do it. Now, people will argue with that and say, Ira, it's a bigger database, and I've had those arguments, and I agree. But go count, and you tell me. And at the end of the day, I think you're going to join my camp. I'm not saying to go short. I'm saying the odds favor you're going to break. WTI, the first time that you're up and over the band and holding it. Same thing. I think the pros will be stepping out of that market. And heating oil, another stellar day in the marketplace as well. So you put it all together, you try to come up with a game plan, and I think I have part of it for you. Here it is.